Hello traders, hello everyone, my name is Gregor and welcome to our new update Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I'll look at the dollar, yen, euro, pound, crude oil, dollar, Mexican peso and dollar versus NOK. So as you know, main theme of the day is probably Bank of Japan. They didn't make any major changes to their policy. However, maybe still this will be the case later sometime this year, but it really will depend on inflation. So we have a new report coming out in Japan this Friday, and if inflation will keep going higher, maybe this will still make Japanese yen very strong, because maybe sooner or later they will have to change their policy. However, yens were aggressively long over the last few days. So because Bank of Japan did not deliver what speculators were expecting, we are seeing a very strong bounce today. We are also, from an Elliott wave perspective, we are trading at this 126 130 area, very strong support here when looking back at the former fourth waves. So I still think that the next three wave rally, whenever this one occurs, is going to be potentially a very nice opportunity on the short side. But for now, based on this extended move, I think it's a very risky to be long Japanese yen here. I think that it's much safer plan to wait on this recovery. Maybe even right shoulder could play out if the price would stabilize here at this level. Now let's take a look on the euro. There were some ECB comments coming out this morning. So it looks like that euro is still on the bullish side. Overall dollar trend is bearish, despite the bounce on the dollar yen. So that's a different story because it's linked to Japanese yen, but overall dollar is still on the back foot. And looking here on the euro dollar, it looks like that we are going to retest this 109 level, where we have plenty of pips. Above that we have 1.1 level, which is also a very strong psychological figure. Keep in mind that we have 5 waves up, and we know that after 5 waves up, market could slow down. Of course, the 5th wave can always be extended, but just be aware that that's again a little bit risky play to be long and target for much higher prices, since we know that correction can occur before that recovery will resume. So just be aware that we could be slowing down here, possibly already see a reversal by the end of this month. Okay, now let's take a look on cable. Cable is seeing some very nice move to the upside just now, because there was a release of inflation figures in the UK around expectation 10.5% versus 10.7 last month, year on year. So still inflation is very high, obviously. So speculators are probably betting on Bank of England to stay hawkish, because sooner or later they will have to admit that maybe inflation have to come down. But they are aware of the recession risk, and that's why they are much more careful compared to other central banks. However, looking at this wave structure here, I think that we completed this wave for pullback at the very nice area of support that we've been tracking over the last few weeks, and so far we have seen a nice bounce, and still there is room for 124 60 70 to finally print a new high for a 5th wave here. Okay, so cable overall, I think it's bullish. Even if we see some kind of a reversal, unexpected drop back towards 1 to 2 level, I still think that this will be the whole price action from mid of December will be seen as a correction within upturn. So sooner or later I will be expecting even a higher pound. Now let's take a look on crude oil. Crude oil is making a very nice reversal from that area of support where we had the lower wedge line. As you know, these are quite important, because normally it suggests that bears, despite lower prices, are not that strong anymore. In fact, the price came all the way back to 67 to $70 per barrel, where White House actually announced a few months back that they are interested to refill their reserves. Okay, and we are seeing so far a very nice bounce to the upside, currently testing this upper trend line, not really broken yet, but I think that if this will happen, let's say that we see stable prices above $82 per barrel today and maybe tomorrow, then I think that much more upside could be seen. Looking at the 4-hour chart, we are currently now in a wave free of a free wave of this recovery from the low, so can be even wave C, who knows, but this one will be resistance around to watch around $83 per barrel. So if we also can smash this one out, then I think that more upside will be seen after the pullbacks. Now let's take a look also on dollar Mexican peso and dollar NOK. As you know, crude oil, higher crude oil has a positive impact on commodity currencies such as Mexican peso, CAD, and NOK, of course. And Mexican peso again is one of the strongest, like it's been the case for 2022, when we have seen just ongoing consolidations, when others were moving sharply to the downside, sharply selling off versus the US dollar. So when other markets are now trying to pick up, of course dollar Mexican peso is breaking the support, and so far we can see a very nice extensions to the downside over the last few days, coming back with the price to this 2020 pandemic levels. But still, looking at the wave structure here, I think that we are in the middle of wave 3. We could see some rejection here, obviously because of big important level, but then eventually I will be expecting a push below that level after any short-term recovery. Now looking also finally on dollar NOK, this one broke this trend line very nicely. Then we have seen almost a retest of that trend line a week or two back. So because market responded quite nicely to the bearish side from that highs, I think that there can be more weakness coming at least towards 90.50 level. Why I'm looking at this level? Well, because I have also another wave count which suggests that this pullback from the highs could actually be a wave 4. So I'm not rushing with the wave counts here in one of the directions. I'm just aware of that anything can happen. But even if this is a corrective wave 4, still there is room to retest the former wave 4 here, as I said, 9.50. And why this could be the case is because looking at the 4-hour chart, notice that the rally from December lows clearly was made by 3 waves. Also then this drop was a very strong one, clearly impulsive, that overlapped wave A. So clearly a recovery from the December levels cannot be impulsive, and if it's not impulse, then we know it's a correction. If it's correction, then we can expect that market will resume into the direction that unfolded prior to the correction, which was obviously to the downside. So I'm expecting more weakness here. Also, we are seeing potential bearish head and shoulders formation. Right shoulder maybe could be already finished. Now we are at this neckline. Okay, so we will see what happens down here. If we can break 9.8 level on a daily basis, then I think more weakness could be in the cards here, looking for further weakness into the wave 3. And maybe this one will try to catch up the Mexican peso. Traders, I hope that you enjoyed this video. Talk to you soon. Bye.